GM, this is Morning Markets. It is Wednesday, the 17th of September. So, what did we see? Well, yesterday we got a nice push up towards the high. Didn't manage to close above yesterday's high, but we tagged it. And really, what we saw was most of the session traded within Monday's range as expected. And towards the later end, we pushed towards Monday's high, fell back below, pushed above with good closes, and now we're seeing price drift back below this morning. So overall, you're getting this higher low after higher low structure forming pre-FOM C, which is interesting. You're not seeing that classic chop pre-FOM C, and the reason why I dived into last night actually when I went through the funding rate. So looking at the order flow on Bitcoin, I noticed that the funding rates were going below neutral, which potentially means that people are shorting this. As you can see here, funding rate, this bottom section was slowly, gradually going lower. And I want to dive into that quickly because I had a good question from one of you asking me how I use all of this data. So we've got price at the top here. That screenshot was when Bitcoin was over here. So as you can see at the bottom, this is the funding rate. It was slowly going lower and lower and lower and lower and lower and lower. Now the funding rate shows the premium or discount of the perpetual futures price of Bitcoin to the spot price of Bitcoin. So if the perp price of Bitcoin is way higher than the spot price of Bitcoin, what happens is for anyone who has a long position open on your exchange, you pay a funding rate fee to those that are holding shorts. And when this, of course, goes negative, it's the opposite. That means the perpetual futures price is below the spot price. And that indicates that longs are actually being paid to be long by shorts. So that's how the funding rate works. Therefore, when you see the funding rate going lower, now it is all about the rate of change here. That's what gives you the best insight. And the rate of change was gradually going lower and lower and lower, which indicates one of two things. It could either mean that spot are bidding hard on Bitcoin and they're outpacing the perpetual futures bid, which is a very bullish signal because a spot-led market is a healthy market. It's spot that does the big moving in financial markets because they're buying the actual asset, they're buying the actual supply. Alternatively, it could just mean that perpetual futures longs are closing. So that, of course, would also have the same effect. It would reduce the perpetual futures price. And if spot are bidding, that increases the spot price. So that's how that dynamic works. And of course, vice versa, if the funding rate is increasing, like we've seen this morning, that means that either spot are not participating and they are potentially even selling, or it could mean that perpetual futures longs are getting overly excited and outpacing the spot bid. And the way that you can get a better reading of which one it is by looking at open interest. So that's this section here. This shows the longs and shorts. And this is denoted in contract terms, so in terms of BTC. And during the time where the funding rate was gradually rising this morning, you also had open interest rising. So that means futures positions are opening. There is more interest in the market. That's why it's literally called open interest. So since positions are opening and the funding rate is rising, you can, of course, estimate, nothing's ever certain, that this is likely longs chasing into the recent move. And that's exactly what you saw. And now those longs are being bled out. And you can see as price goes lower, open interest is decreasing, meaning positioning on the futures market is getting wiped out. So that shows exactly what I said. Funding rate was rising, open interest was rising this morning, longs getting too excited. So what happens? Longs now get bled out, and you can see the open interest decrease, meaning they are getting forced to essentially close their positions. Now this is CVD, so this shows the market orders only. It doesn't show limit orders. So it shows if this red line, so this is the perpetual futures CVD, if this is decreasing, that means on net, the market orders are selling or shorting. And this is the green CVD, so this shows the spot market, which means on net, spot are selling as it's going down. So spot sold during this move. Perps, they've relatively stayed flat generally because it's not really moved that much. So spot are definitely controlling this move going down. Perps were staying long as we've seen. Even with the CVD, you got this big push up, very aggressive on this candle here. And from there, what I like to do is just look at where would these guys put their stops. Okay, this low over here at what, 116.5, that's definitely not safe because this was where the aggressive push started. You've got an order block here, so a lot of people put their stop below the order block, so 116.4 roughly. And then of course, you've got this big liquidity level here at 116 flat. All going to be targets if longs are not going to be closing here. And the only really way to save those longs when the price is going against them like this, and you've had a build up of open interest, you've had a build up of the funding rate, is for a spot bid to arrive. And that could happen. ETFs can come in during the New York session. They can start bidding and they can essentially lift the rising tide of longs. They can lift all the boats up with that underlying spot bid. That can definitely happen. So order flow analysis, it doesn't tell you exactly what's going on. It's only as good as the interpreter. Like anything in trading, like anything in life, your tools are only as good as the person using them. Of course, I don't think you have to use order flow and all this analysis, especially not while you're starting out. If it confuses you, that's fine. You don't have to use it to be a profitable trader. You can be perfectly profitable without it, but it is useful to use if you are interested in it. And this top section here is just liquidation, so not the most useful. I can actually just remove that now. I mainly use these three. So what did we see last night? Back to the analysis. So I mentioned that screenshot here. We were seeing funding go negative. So as you saw, kept going negative, kept reducing. And what did that lead to? Led to this big spike up because you had this big open interest build up, as I mentioned. So let's go to the bottom of the funding rate. To the bottom of the funding rate, you had plus 1% in open interest. Price at the same time, take it from here to that same point, was down 0.2%. So with the funding rate also going down, with this perp CVD also going down, and even the fact that spot was selling, this shows that this build up of open interest with the funding rate could likely be shorts. And that's exactly what happened. You then got this rally up to take some of that positioning out, and then you see the open interest decline. So what we're looking at from here is funding rates have returned back to neutral. There has been longs chasing this morning, so really it's probably going to lead to chop. I mean, we've got FOMC in a few hours, so nothing too much of interest here at the moment. I mean, if we take it to current price, you got price up 0.2%, open interest up 1%, so not really that big of a futures-led market. There is some futures positioning getting involved here, but it's very much going to probably get hunted on both sides today as we head into FOMC. So this liquidity, as I mentioned, not safe. This liquidity, not safe. Super easy for price to whipsaw both ways, take out both liquidity as we head into the meeting or at the meeting, most likely. And even these liquidity levels here, if we do start to close below the H150 EMA, close below this liquidity, then that opens up some lower liquidity targets here. But overall, I don't think you want to see Bitcoin close below Monday's low. So I think the worst thing you could see is for Bitcoin to close below, backtest it as resistance, because that likely leads to some of this earlier liquidity getting tested and potentially even filling in some of these gaps over here. So at most, you want to see this Monday liquidity swept and reclaimed. It's going to be the reclaim that gives you the signal that this is still setting up bullish structure in the immediate short term if we do sweep as low as that. But otherwise, just looking for any of these levels to sweep, not sure which ones, and for price to then get back above this level or wherever that high may be. Because then it just sets a higher low wherever that comes from. That's what I'm looking for as we head into FOMC. So looking at the daily, looking at Bitcoin, ETH, Solana, I want to talk about that post I made last night. So did a big market update. I talked about how I mentioned in morning markets, I mentioned even in the weekly ledger that Bitcoin is likely to show some strength in crypto here. And well, that's exactly what we saw. Mentioned in the video, Bitcoin holding, alts profit taking, and that's exactly what played out. We got a big green daily candle on Bitcoin, Ethereum, red candle, so continued selling. Solana with a marginally green candle, but couldn't get anywhere near Monday's high, whereas Bitcoin strong. I told you guys, trading's all about finding those outperformers because, yes, you could have a system which triggers you to get long on Solana, Bitcoin, and ETH all at the same time, but the person who's winning, the person who's making the most gains, is the one who got long on Bitcoin. That was the trade because Solana had a muted move, ETH even finished down, whereas Bitcoin finished with a big, full-bodied green daily candle. So the reason for that was as simple, and I want to explain it to you guys just so it makes sense, and it's as follows. So we've already seen the rotations play out from Bitcoin to Ethereum to Solana. So you guys know that. If you look at the ETF flows we saw in the first half of August, ETH had 3 billion in inflows, while Bitcoin saw 11 million in outflows from August the 1st to 15th, which was absolutely unprecedented. We'd never seen anything like that happen before. But what does that tell you? It tells you that this isn't new money coming into crypto and buying ETH. This is profits clearly rotating from Bitcoin into Ethereum. That led to your lovely rally that we have seen on ETH from 2K all the way towards that 4.9K level. This was profit taking on Bitcoin. As you see, Bitcoin's pretty much gone sideways during this entire period, where ETH has absolutely ripped. You can see just by my cursor here that during May, Bitcoin's pretty much at the same level around this 112 to 116 range, while Ethereum, on the other hand, went from 2.5 to 4.9. So Ethereum doubled while Bitcoin barely moved 10%. Clearly, when you look at the ETF flows, you factor that context in, Bitcoin profits rotated into ETH and that led to the ETH move. And then once Ethereum hit its all-time high on this candle here, guess what happened? Look at the bottom left of the screen. You then had Solana make its own move. Solana went from 200 to 250. So a 25% move. All while Ethereum went down. So, yes, you'd think crypto is all correlated, and generally speaking, it is, but money rotates at different times. And the rotation games, especially as you get later into the cycle, become more and more and more dominant. The rotations get faster, they get even bigger, and they go up the risk curve into riskier assets, so you get those bigger moves. Super important to understand. It's not a coincidence that as soon as ETH hit the all-time high liquidity, Sol then took over and rallied because that was the target. And then what happens? Ethereum profits rotate into Sol. So again, we didn't see new money come into crypto. It was instead just profit taking and rotations into Solana. So you have Bitcoin into ETH into Sol. So back to my point, unless the market is about to rotate into lower caps now, this, which would be a late stage cycle signal, it's actually best to see flows go back into Bitcoin to kick off a new trend, even for your altcoins. And the reason for all of this is because there's no signs of a massive wave of new liquidity like we saw in 2020 during COVID. There's no signs of rampant inflation, which require that big liquidity contraction like we saw in 2022 when the Fed hiked rates. Instead, we're in this Goldilocks zone for majors where the liquidity situation is gradually improving. So it's very different from the rapid injections that we saw in 2020. So let me just show you on the chart here. You can see it with the interest rates. Let's look at this. So you get a chart with more price history. Take this off. So Bitcoin, last cycle, rates within 1 month went from 2% to 0% during this period here. That is a massive rate of change, and that led to this parabolic run. Because what happens when you take interest rates from 2% to 0% within a month, all of a sudden the entire bond market becomes unattractive. And the bond market is huge. It's one of the biggest financial markets. That is your T-bills and essentially the US debt market. It's a way for investors to get as close to risk-free returns as possible. Because the US, if anyone's going to pay you, it's going to be them because they got an endless printer. It's unlikely that they're going to default. So that's why I say it's your closest to risk-free money. But when the interest rate goes from 2% to 0%, those bonds now yield nothing. They're useless. So investors have to get out of the bond market because when interest rates go to 0%, especially so quickly, inflation's about to take off and go rampant, which is exactly what happened during this rally. Therefore, unless you want to have 0% returns on your money and have, in fact, inflation at 7, 8, 9% eroding your money year on year, so you're losing money just for holding cash, you have to get into riskier and riskier assets. So that's why money flowed into Bitcoin and it went parabolic because you had such a fast, rapid rate of change in the liquidity situation. You then had QE, you had printing, you had fiscal stimulus as well, not just interest rate cuts. So that leads to riskier assets, which Bitcoin was seen as, especially at the time, absolutely ripping. That led to altcoins. That led to your alt season in 2021, where absolutely everything went up. You had your blockchain bubble because investors need to chase a return. And the only place they get a return is in the riskier assets when those low risk assets are no longer yielding anything, like your bonds. So it was that 2020 injection that forced investors into those extremely risky assets, as I mentioned. Whereas today, the liquidity situation is gradually improving. You don't have none of this rapid rate of change and huge stimulus coming in, which leads to this parabolic price action. Instead, this cycle, you've actually seen Bitcoin move up much more steady. You can see we go up, we consolidate, we go up, we then have a lengthy consolidation, we go up, we consolidate, dip, consolidate, up, gradually moving. All of this was consolidation, breakout. Whereas this was all just one big breakout up only move. That's why it also flushed as quick as it went up in 2022 by the time the bear market arrived. So it's actually been much more healthy. This is what you'd want to see in terms of a super cycle for Bitcoin. But of course, this is daily levels, so let me not get too involved in the high time frame. We'll save that for monthly and weekly outlooks. What I'm trying to say is the assets that have benefited from this gradual liquidity improvement are your majors. It's been the S&P, it's been the NASDAQ, it's been Bitcoin, and it's been gold. And because of that, the only way for things like Ethereum, things like silver, and your lower cap stocks to see their big price appreciations have been from the majors, first of all, having their rallies. And it then comes from the wealth effect when crypto traders take profit on Bitcoin. It flows into ETH and SOL and altcoins. Gold traders, they take profit and it flows into silver and other metals. Those trading the S&P, they take profit and it flows into the Russell 2000 and those lower cap stocks. That's what we've seen recently. And the point is, it's due to profit taking, not any big rampant liquidity stimulus. And that's okay because, as I said, it's more healthy. It's something we haven't seen before. And all you need then is for Bitcoin to hold this high time frame SR level, which it has done every time, as you can see. Flip this level, held it as support, flip the next level. We then set a new high, flip this level, held it as support, broke through, set a new high, held the previous level as support, then we broke through again now, and this is the previous high time frame SR level, which we briefly closed below. So some signs that we are getting later into the cycle. There is some signs of weakness there as we're slowing down. That's fair enough. Bitcoin has gone almost 10x from the lows. It's going to slow down at some point, guys. But we are seeing it bounce as soon as the level reclaimed. And really, you want to see Bitcoin lead here. You want to see Bitcoin ideally not stall out around 120K and actually close a weekly above it, which has been unable to do, and even have a new leg higher. That's the best thing for altcoins because then it allows profits to rotate, the wealth effect. If we don't go higher, there's no new profits. Now, don't get me wrong, if Bitcoin rallies back up to 120K, there's going to be some profits which allows those rotations, but for the biggest move in altcoins, for that real rotation, that real wealth effect, you actually want to see Bitcoin break out here. And then you can see more capital flow down. So that's why I said it's actually the best case scenario for continued Bitcoin strength. And it's okay to see ETH and SOL and alts lagging as they've had a good run recently. You're seeing some natural profit taking, but to set up the new wave, you now want to see Bitcoin generate some more capital and build up that wealth effect. So that's what we've seen in terms of Bitcoin. So very good. You want to see this continued strength. You want to see Bitcoin dominance continue rising. As I said this week over and over in all the videos, Bitcoin is the trade. If we are going to go up, it is the one to be long on. And that is why, of course, trade of the week, I got swing long on Bitcoin, and that's been playing out decently here. I think it was actually one of these charts. I know I compounded it as well recently this morning at 115.5. But if you go back to the weekly ledger video, I set out the trade of the week for you guys, which is playing out pretty decently so far. And back to this chart, as long as Bitcoin dominance keeps rising, that's actually going to be very bullish for BTC. because if we are going to rally, it's going to be Bitcoin led. Now, of course, that's not guaranteed. Coming into FOMC, we could see that downside move, as I mentioned earlier in the video. However, Bitcoin dominance can rise on both the downside and the upside on Bitcoin. So it's not promised that this Bitcoin strength is going to be to the upside, but it is the ideal scenario, as that's what's going to generate the wealth effect. If we can have some profit taken on Bitcoin from higher, that will allow rotations into altcoins, as opposed to selling now and just seeing Bitcoin hold up stronger on the downside. So if longs are the play, Bitcoin has been the one. So let's see how we go into FOMC, what it's looking like. And overall, when we take a look at gold and take a look at stocks, we're now seeing gold stall out a little bit. So a little bit of a topping candle over here. And early this morning, we are retracing some of Monday's move, which will be very good for Bitcoin if this chart can start slowing down. And same for stocks. This is exactly what I mentioned yesterday. If you see stocks, you see gold actually slow down, that allows Bitcoin to have just been, let's say, lagging and actually now take over. Because as I mentioned, stocks, gold, they're at all-time high breaking out while Bitcoin is not near its all-time high. So if these actually stall out and consolidate, I expect that to be very good for BTC, because that can allow Bitcoin to then take over and capital to flow from stocks, from gold into BTC as the catch-up trade towards its own respective highs, anywhere from 120 to 125k. So very good to see gold actually filling in this gap here. That's what you want to see. It start to get choppy. You don't want to see it continue trending up with higher highs and higher highs, as you guys know by now. That is typically not great for Bitcoin, as when gold rallies in the short term, Bitcoin consolidates, and when gold consolidates in the short term, Bitcoin rallies. So looking at the low time frame here, gold lost its H1, 12 and 21 band trend. Very nice to see. I want to see this entire gap fill in to indicate that consolidation is likely here. And when it comes to stocks, they have a big gap up on Monday, which could start to get filled in, starting to lose these H1, 12 and 21 bands as well. So again, this would be good if these assets can just start consolidating. Not, of course, nuke. You don't want to see them just plummet and start losing key levels and hitting these liquidity targets, as that's going to drag Bitcoin down as well. However, when the dust settles, especially if these can consolidate and hold up strong, Bitcoin is going to then take over, in my opinion, and be allowed to move towards the upper end. But keep an eye on your Monday levels, Monday low, Monday high. As I mentioned, you want to see that hold and reclaim if it is hit. And if it's not hit, then just watch for new highs to be made as we head into FOMC. So that is everything when it comes to Bitcoin and crypto, and Bitcoin and stocks and gold. Covered the trade of the week update, so going well on Bitcoin. Now just want to see, can we hold these daily bands over here? Can we stay above them on any dip? And ideally, you want to see yesterday's candle hold completely. And of course, you want to see Monday's low at the minimum hold on any reclaims if we do sweep it during some volatility. So there is going to be volatility today. As I mentioned, it's going to be Powell's speech that will be most interesting, because one rate cut is expected and fully priced in already. Therefore, yes, you can see whipsaws both ways. Don't get chopped up as we head into the meeting. No need to be taking any big positions just before, because you're likely going to get wrecked on both sides. Wait till the dust settles, wait till after. And looking at previous FOMCs, so this was last year's FOMC, and it was actually after we had a lengthy period of interest rates being paused. And if I get the same indicator up here. We have also had a lengthy period of interest rates being paused. And in both scenarios, we're now expecting one cut. So it's interesting that we're seeing a very similar setup to September last year, FOMC, where you got that first rate cut after an extended pause. And price is also acting similarly. So we've uptrended. In today's example, we've also uptrended going into the meeting. We're holding these 12 and 21 EMA bands. We broke out of this recent consolidation. So FOMC was this orange line. That's when the decision was made on the interest rate. Actually a bit ahead of schedule, because that would be something like this, where you break out of each respective consolidation. So take this high here. We broke out, and last year we saw something similar, where we was making high highs and higher lows going into it, as we are here. And then we broke above actually after the meeting. Here we broke out before. Now, that was of course due to people potentially shorting, a bit of uncertainty around the meeting, but that uncertainty is actually quite bullish in my opinion, especially when you're making these higher highs and higher lows. Because people getting anxious, urging caution, going into FOMC when price is already uptrending, typically the trend is your friend and the trend takes precedence, so it will lead to the market potentially going higher. I mean, when you're in an uptrend, if you're long on Bitcoin, the best thing you want to see is people are uncertain. People have disbelief, because disbelief is what fuels the rallies. You don't want everyone in agreement that we're going so much higher, because that's usually around the top. So it's actually a very good sign that we're seeing shorting on the order flow, that we're seeing uncertainty going into this meeting. People are not sure if it's sell the news or if they should be buying, all while price is making higher highs and higher lows, with a similar setup to this time last year, where we also saw that rate cut. So from there, you really just want to see if we are going to repeat anything like last year. These 12 and 21 bands and that 50 band on the H1 to hold today and tomorrow and for the rest of the week, really. And that's going to allow potentially this setup to play out and Bitcoin to rally higher off FOMC. But of course, play the charts as they come. Nothing's guaranteed in the markets. There's going to be volatility. That's likely. Now, of course, this is assuming there's going to be one rate cut and not some surprise no rate cuts or two rate cuts. Deep dived into that in the weekly ledger. Of course, that will definitely cause some big volatility to the upside or downside, depending on whether it's two cuts or no cuts. But that's unlikely. It's probably going to be one rate cut. So that's what I'm seeing here. This is, of course, just a fractal. Doesn't mean it's going to play out. You don't ape your net worth based on a fractal, and you don't get long because of a fractal. It's just interesting to see that a similar situation last year where rate cuts were paused and we then got our first 25 basis points rate cut. Price was making higher highs and higher lows, breaking out, and we've had a similar setup here. So the floor is set for Bitcoin to outperform if it wants it. Not guaranteed to happen, but if crypto is going to go up, Bitcoin looks most primed, and that will be most bullish for your altcoins, which will set up later if we can rally to 120 or even all-time highs. And if Bitcoin finds resistance there and then starts consolidating, well, that's again when you can start looking for your rotations. And that would look, of course, something like this. If Bitcoin stalls out around 120, it's this area here where your altcoins are going to then take over. So that's what I'm looking at today. No big positions, no day trading, low time frame, just holding that swing from trade of the week as explained there. So make sure to check that out if you haven't. And overall, looks promising since we are building good structure and there is disbelief going into the meeting. Obviously, early signs of longs getting excited this morning with the funding rate ticking up and open interest ticking up. But as long as we can hold these bands, that would be best case scenario, as then it would be very similar to last year. But otherwise, looking at Monday's low to hold on any sweeps at the lowest. And then for price to make new highs either today or tomorrow as we head towards the end of the week, that's when you're going to see the true reaction to FOMC. So don't get emotional when the decision drops or based on the price action during the meeting. It's all just whipsaws and algos in the first 30 minutes. It's the next few hours, the end of the New York session, the next day, which tells you the direction that price is likely to actually take. So that is morning markets. That's everything I wanted to cover. Let me know if you got any questions. I'll see you guys in the next one.